Welcome to my live stream. It was a rough day on Wall Street today. I'm sure you've noticed the market sold off pretty harshly. The only thing I could say is it recovered some of the losses. If you especially look at the NASDAQ, certain parts of the day, it was really, really down. It was down more than 2%, and it recovered back down 1.43%. And I was noticing that some stocks, like Nvidia as an example, was down more than 4% at its lowest point. And let me refresh this. I think this is a little dated. And it recovered to minus 284. Broadcom at one point was down like 6%. So it's not as bad as it could have been. And that's kind of a nice way of saying, boy, it was a horrible day, but it could have been worse. And that's how things played out. Now there was some green out there. The big banks, they made it through the day in decent shape. And consumer staples definitely made it through the day quite nicely. It looks like Pepsi had good earnings and they went up almost 5%. Energy went up. Exxon was up almost 4%. Very nice. Gold continues to climb. The telecom stocks did well. Verizon's been on a tear. It's been really, really going up, which looks good. The semiconductor space, it's seldom that it takes a break, and it took a break today. Now, I'll tell you what's really breaking is the whole software space. It's just getting depleted. The valuations are getting so small because the market thinks that AI is going to really disrupt a lot of those businesses. And it may be right. At this point, I'm waiting. I'm not putting any more capital into software until I see that the market is going to start buying those stocks again, because I don't like seeing my capital just go and just sit around. It's not a good thing. All right. So I wanted to welcome our newest member. It looks like Lauren is our newest member. Thanks so much for becoming a member, and thanks for sending me your email address. I got you all set up with the Discord. It's good to see your name on Discord. I also gave you access to the shared folder that has the Advanced Investor Terminal. And that's where you can find all the valuations that we complete together, and over 370 at this point. So you can just hit your find function, Control F, and then you can find a ticker out there. And what I also provide is the watch list on that Advanced Investor Terminal. So you could see which stocks have been reviewed, and then you'd be good to go. You can go look at the analysis. So thank you very much for becoming a member. You also got invited to some member calls. We got together this morning. It was a couple of members, so we can talk really at length about what was interesting to them. And we went over a couple of things there. And we also have a call. We have one every other Tuesday morning. We have one every other Wednesday evening. The next one will be next week in the evening. And then we have one on Sunday morning for the West Coast. It'd be 1:00 Eastern is when we have it. So hopefully you get involved, and thanks so much for becoming a member. I see some other members out there. Shadow Guy, looks like you are back home. Very good to see your name, sir. Genetic Smite, good to see you. Herdo, how are you, sir? And I appreciate everybody welcoming the new members. It was a rough day out there. What do you guys want to talk about? I've got plenty to talk about. We've got a huge earnings season upon us, but I want to talk about the stocks you're interested in. Put them in the chat. Let me know. If there's a question as well, you can put it in the chat. We'll talk about that topic that you want to talk about. Now, the big company that announced after the market closed was Advanced Micro Devices, and we're going to take a look at that. Probably the first one out of the gate. And we can look at some others. It looked like Pepsi was really catching a bid. That's a nice staple stock. So it looks good. The pharma stocks, man, I don't know what to do with them. Pfizer just doesn't grow, which is pretty incredible. Chubb might be a little interesting to take a peek at. And we'll take a look at those. Now, it looks like genetics, a rotation back into chemical companies. Dow is an example. Maybe. Dow, I want to find reasons to like Dow, but man, they just been a dumpster fire. I tell you, let's take a look at the 1 year. But maybe that dumpster fire is getting better. Maybe we do got to take a look at Dow. Let's get started on Dow because maybe Genetic Smite's hitting on some pay dirt here. You see what I'm talking about over the 5 year. This is just a real bad situation. Now they announced on January 29th, which was last week, and the market looking at the last 5 days, the market liked what they announced. So I guess the news was good. Let's take a look at that earnings, go to quarterly. Now, it's the growth rate doesn't look good. They contracted. They probably guided that they're going to start growing and they're going to recover. Now, materials have been doing great, fantastic in 2026 and for a good part of 2025 toward the end. They've been doing great. And Dow just has been a problem company. I'll tell you, the balance sheet kind of scares me a little bit. The debt to EBITDA, see if I can find that here. Debt to EBITDA, 3.91. That's over my 3, right? I like having that below 3. And this one here, violates that qualifier or disqualifier, I guess. And that's a problem for me. I like businesses that are good, but I don't like them when they're not producing free cash flow. They have debt to EBITDA that's way above 3. How are they going to pay back that debt? So that's one of the things that worries me about Dow, and that's my apprehension about buying into the stock because I don't want this thing to get even worse. But the stock has been moving over the 1 month up 25.63%. Look at there. So I don't have any free cash flow to work with, but let's take a look at something. I want to go to the quarterly and see if they produce free cash flow in the quarter. Maybe there's a glimmer of hope here. So it's still negative. It's just a really rough situation. And, this one here is going to take a lot of concentration, follow through, and so forth. It's just not a good stock for me. It's got to be decent. If I'm going to spend that kind of time and take that kind of risk, I'd rather find a small cap that maybe has a lot of growth. Because if that one takes off, that could be a nice 5-bagger as an example. Dow could be a nice return on investment, but could also just bounce around the bottom and just waste my time. That's my feeling about it. Just one opinion, but I'm going to share it with you. Dow just wouldn't make it into my wheelhouse. So it looks like Peter is on. Good to see you, Peter. It's been a little while. Great to see you. Hope you're doing well. I saw you on Discord making some moves on your portfolio. Good for you. Genetic Smite. Very good. So nicely done. Buy at 23, sell at 28. Kareem Biggins, Tony. Good to see you. Thoughts on Uber? Uber has been coming up. It actually came up on the member call. Let's take a look at Uber. And, the stock it was under pressure today. I did buy more shares today. The stock has worked really nicely over the 5 year. If you see from the low of 2022 up to this point, it's doing well. When you buy the stock, of course, makes a big difference. In the 1 year, it's down to 16.57. Today was a really down day, so that's part of it. And we're going to hear from Uber tomorrow. Okay. I bought more shares because this morning, another investor, we were talking about it. He has a pretty good sized position in Uber. He wanted to see if we could talk about it. We certainly did. I was able to just kind of refresh my thoughts on the stock. It's a nicely discounted stock. I like their position in the marketplace. They're not going to be replaced anytime soon. I know that it's getting pretty exciting out there with the whole robotaxi, thing coming on. I think Uber is going to be a player in robotaxi. I think their network, the number of people that already are comfortable with the Uber experience, the brand, they're going to stick around Uber. I don't think people are going to be all that ready, not everyone, to get a Tesla app. The Waymo app, has been growing, but nowhere near what Uber has. It's just not anywhere near the scale of Uber. It's a startup. So Uber to me is a really good stock to hold. I love their fundamentals. I love the cash flow they produce. Just a real good cash flow company. It makes sense, right? They don't have to spend a lot of money on cars or paying drivers because those things come to them. People want to drive on Uber. They bring their car. They pretty much are a gig worker. So I'm good with Uber. That's why I bought shares today. It's discounted by 65%, and I will be covering Uber very closely tomorrow. They usually announce in the morning, and let's see if my memory serves me right. Let's see here. Uber before the market opens. So this one here, Daryl and I are going to be streaming. So if you want more content on Uber, geez, we're gonna hit Uber 3 times in the span of like 24 hours. We hit it this morning. We're talking about it now, and then we're going to talk about it tomorrow morning. And Daryl could do his analysis on the charts. So that's where I'm at with Uber. We'll see how things play out. We'll see if we're in the beginning of a correction because it's been a really rough month, maybe two. Some sectors have just been getting really beat up. Others continue to fly up. But in general, today I think is a pretty good example of where the market's head is, the psychology. So we might be starting a nice correction, which means I get to buy stocks, companies I really like at a discount. So I'm good with that. Of course, tomorrow while I'm at it, we've got the big company by the name of Alphabet. Alphabet's announcing tomorrow, and Daryl and I are going to be doing a watch party. So get your popcorn out and get your pizza order in early because we're going to do a watch party. We're going to talk about Alphabet. We're going to go into it, look at the fundamentals, look at the key metrics, see how their cloud business is doing, see how Gemini is growing. I'm really impressed with Gemini. I've been doing so many things with it. It's been really, really good. And we'll see how the market reacts to Google Alphabet. For the last year, the market has really liked Google Alphabet. They have agreed with their strategy. They have given them kind of a vote of confidence. The stock's doing really well. And I think tomorrow we should see good news. I think I'm expecting good news from Google. Now we're in a down market, so it might be good news during a bad market, which means that it won't rally higher. Might lose a little bit too. But we'll see tomorrow. So that's going to be big news tomorrow after the market closes. Novartis, Novo Nordisk pre-announced saying it's going to be bad, everybody. And their stocks sold off. A lot of stocks sold off hard today. PayPal, geez, brutal. PayPal sold off so hard. Qualcomm looking to announce tomorrow. I think Qualcomm's going to have good earnings because their chipsets go into Apple iPhones. And Apple had a very good earnings showing that there were more handset sales. Well, that to me translates that they had to buy chips from Qualcomm. So that should be, I think, a positive earnings. But we'll see. They'll have to announce and let us know what's going on. Of course, Eli Lilly is going to announce as well. So big stuff. Just a lot of companies coming at us. All right, let me park my conversation on that. Looks like Sam is on. Good to see you, Sam. Okay. So Shadow Guy, I'm pretty happy with big chunk of Novartis and Basilia. Good for you. All right, Sam, good to see you. Man, everybody's here tonight. Reddit, geez, man, Reddit's been getting sold off. And I tell you, Reddit is a good stock for me to own. I am not buying more shares because I have so much concentration in the communication services space. But this has been on a sell-off. It's been selling off. Now, we've seen this movie before. You see this movie of the stock selling off. They announce, and then the stock flies up. They're going to announce in 2 days. So I'm totally optimistic that Reddit is going to announce good earnings, good growth. There's no reason why they shouldn't. And this stock, it's been a very volatile stock. But if you look at the long-term chart, as long as we can, because they IPO'd less than 2 years ago, it's on an upward slope. So Reddit is a solid stock. It doesn't have a big discount because it's so darn young. I don't go over my skis on valuations when it comes to these companies. I try to, be opportunistic, but also realistic. And look at that 31% discount. I take that back. 31% discount on a special business. Sign me up. Sign me up. If I didn't own, let me show you my allocation here. So this is my allocation into sectors. Okay. And the biggest sector is communication services, Reddit, Meta, Google Alphabet, and a little bit of AppLovin, tiny bit at this point. It's the biggest sector that I own. So you need to show some discipline. I can't continue to buy Reddit, Google Alphabet, and Meta, or next thing you know, I'm going to be at like 50% if I don't watch it. So for now, I'm waiting for the earnings. If they kill it on the earnings, I'm going to have to buy some more shares. That's just it. But I think for somebody who has no allocation problem, Reddit's an opportunity in my book. I think it looks really good going into the earnings. It had a really hard sell-off today. But let's take a look at what is being forecasted for Reddit. So look at this growth here. We don't see this growth everywhere. Of course, like Palantir is doing this. They do this in their sleep, right? 2026, they're going to grow almost 39%, followed by 30 and then 21. These are excellent growth rates for a very profitable company that's going to expand their profitability. Look at that expansion. Beautiful. I'm positive on Reddit. It's nothing there for me to be worried about. Just excited about it. And I look forward to their earnings announcement. We'll see how it goes. NBO did get crushed today. They pre-announced that they're not going to do all that well in 2026, and the stock sold off. Very good. Peyton, good to see you. Good to see your Discord messages as well. Yep, agreed. Reddit. I think, Reddit's a special business that's different, and it has, I think, a pretty loyal user base. I think the users really like the platform, the way you can interact with people that are on Reddit. So I think the business is solid, and we'll see how things go in a couple of days with Reddit. All right, we're off to the races here. We went over Reddit. There was a couple other stocks that announced. Let's see if I maybe skipped over one. Chubb. So what happened to Chubb? Chubb announced, and their stock is under pressure. The insurance business has been okay, but this one here, for a while, you could have bought this stock at a really nice price and really rode it up. It went up today. One of the rare stocks that went up. It's pretty special to go up on a day like this. So Chubb's looking pretty good. 15.26%. You get paid a dividend. These guys, of course, are an insurance company. So it looks good. Nicely done, Chubb. Let's do this. Nobody's asked for a request or anything. So what I'm going to do is I'm going to open up Chubb and let's update the evaluation. I haven't updated Chubb's valuation, so we do that together. So I'm looking at this screen and all the information I'm going to refer to on another screen, but let's go over to Chubb. Let's take care of this valuation so that way we've got it nice and updated. So we've got the last one I did was stamped July 22nd. It is time to update it. Let's do that. All right, so I'm going to put it first. I'm going to delete this because I don't use this anymore. It's been a long time since I was referring back to that. And we will put the date stamp here on the member call. It was suggested a couple weeks ago. It's a really good suggestion that I put the date. That way, if you're using the terminal and you look at evaluation, at what point in time was I referring to. That way that is there. Now that we have this history, what I'm also doing is I'm holding on to these valuations so I could see how accurate was I over time. Am I getting better over time? That's what I definitely want to be doing. That's why I want to challenge myself and compare it. So first first order of business, interest rates are going down. So I'm probably going to lower that discount rate. Discount rate is a measure of where interest rates are currently. And a stock is a higher risk than a bond. And what is perceived to be, risk-free bonds, which are the government issued ones, pay about 4%. So from there, we determine a good discount rate. I think for Chubb, I'm going to go with an 8% discount rate. I think it's like good quality companies like a Meta. I'm going to go 7.5. With really high quality businesses, maybe 7 right now. So for Chubb, I'm going to go with an 8% growth rate. I had a growth rate of 5%, but let me start taking a look at what they announced here. So they announced the information is in stock analysis. They grew the last quarter by 4%, and in the trailing 12 months, they are growing by 6%. So that's better. Insurance companies, they get to reset prices. And I know that the cost had been going up on insurance companies, but they get to reset the prices. It's not like they're going to lose money for a long time. Usually it takes time for them to adjust, and then they can get their margins back. And I think Chubb has adjusted, so we should be seeing good margins in their business. Now looking for cash flow. What is going on with cash flow over at Chubb? And let me find that, and I'll pop it in to the model. So I don't have any free cash flow at this time. So this is trailing 12 months as of July. And I'm going to have to kind of hunt around for it. But let's give Gemini a shot here. Let's put Gemini in the game and ask Gemini, hey, can you go look for the trailing 12 months for Chubb? Let's see here. And what Gemini is now doing is it's looking at the screen that I'm working on, kind of looking at all the data that I'm working on. So it knows that I'm talking about Chubb. All right. Okay. So trailing 12 months. Anyway, so all right. So I think I confused Gemini. So I'm going to close it. Let me try to find it another way. So all right, asked a different way. What is the free cash flow for the trailing 12 months reported by the company recently? It looks like the most recent number is what I have. So we're just going to have to run with that number. All right. So I don't have any updated data there. All right. That's a big number. So it's important for me to confirm that. So it's still going to be a stock that I'm going to keep an eye on just to make sure that if the free cash flow, if they're struggling to have free cash flow, I want to catch that and make sure that I update it. So insurance companies tend to really hold their value well, and they tend to do well over time. That's why Warren Buffett likes to buy them. So the cash is really worth a lot for Chubb. Now let's take a look at the forecast along with the earnings per share that I expected for Chubb. It looks like the earnings per share is much better here in 2026. And I'm going to leave a PE of 12. That's fine. A growth rate of 9, that's a little too high. We're going to go to 5. So overall, I think Chubb's a good opportunity, but you have good choices in insurance. You've got Allstate, Progressive's doing better. Chubb is a really good opportunity. But if you look at some of these other stocks, and I'm going to show you a little schedule I put together for insurance. And here it is. I did an insurance video, I don't know, 2 months ago, and this is the schedule that I put together. Allstate looks good. ACGL has a very good price to book and a very low PE. Palomar, and this one here has been really performing great. ORI, that's Old Republic Insurance. It's been doing really well. Progressive seems to be on the comeback trail, but I mean, you can look at these and see which insurance stock seems good for you if you're looking for an insurance stock. But this is in the terminal. If you want to look it up, it's right next to the stock valuation for Allstate. So that is Chubb. Chubb's looking pretty decent right now. And looks like the stock did go up, which is quite an accomplishment on a day like this, right? When things are so red. All right, so that is Chubb. Updated that. Let's take a look here. We got some new comments. Yeah, let's talk about insurance. I mean, Oscar. And Oscar is a health insurance stock, while the stocks we were talking about are just kind of casualty insurance, automotive insurance, home insurance. And Oscar, boy, this one here has been all over the place. Look at that. It's been all over the place. And the government did it no favors, but I don't think they're affected too much by the Medicare, I would say, surprise that really hit United Health and Humana and others. They got hit pretty hard with the surprise that they're not going to be able to raise their premiums. This one here is going to announce next week on the 10th, so a week from today. And it's been growing really well. If it shows up with growth, this stock's going higher. Growth stocks are obviously something that investors want to have, especially a smaller cap growth stock like this in an industry where there's huge addressable market. These guys can grow. They can become 5 times bigger and still be small compared to the giants in the space. So these guys here, if they can outperform this growth plan, look out. This stock's going to really rocket higher. So what are we expecting next quarter for Oscar? Let's take a look. So the fourth quarter is what's going to be announced next week. We're expecting 33% top line revenue growth. That looks good. And at the beginning of next year, it's going to come down to 7, then 14, then 9. So if they improve this forecast and they guide higher, the stock will move. It'll move higher. Of course, unless we're in a big sell-off. Right now, we're a week away from their earnings. I don't know if we're still going to be selling off, but we'll see. We'll have to get there before we can see what the market's going to do. Now, Oscar Health, it's a really nice growth stock. I put a premium on growth stocks. I like growth stocks. Top line growth shows me that customers really like the business, and that's why I like Oscar. And I think it's really discounted by 60% because of that growth. That growth really drives an acceleration of cash flow. The cash flow is so good, I have to tone it down, actually. It's really, their cash flows are very, very good. So I don't even have to grow them. And their earnings per share is good as well. So they're really priced low for the kind of money they make and the cash flow they generate. I'm even discounting by 11%. So Oscar is going to stay in my portfolio because I think long-term, it's going to reward investors that are there. So long as the company keeps doing well. I think the company is doing well. So I'm going to keep holding the stock. So that is Oscar. All right, so let me get a sheet of paper in case I need to write anything down. All right. So moving along, Pepsi had a good day, huh? It was up 5%. That is quite an accomplishment on a red day, but it's a consumer staple, so it should be going up. Over the 1 year, it's up 8%, so I would not be celebrating too much because some of these technology stocks are up 100%, if not 200. So it's not a big accomplishment just to be up 8%. I've never owned Pepsi. It's not my cup of tea. I own other stocks that are in the staples category, but not Pepsi. 3.5% dividend. The stock that really has roared higher is Celsius. If you've noticed, it really roared higher, and it's that growth that they've been able to accomplish. Pepsi and Coke are kind of slow growers, nothing really exciting, but I think the company stock was bought because everybody's afraid right now that growth in tech, that maybe the AI trade is overdone, and we might see investors going to consumer staples for a while until things settle down, maybe get repriced. So that's why they benefited, but I don't know that I'm going to go overweight on consumer staples because I don't want to be sitting on investments that make 8%, on average, maybe 6%. I'm going after 30%. I'm going after bigger appreciation runs so I could really continue to accelerate the growth of my portfolio. So that is Pepsi. Looks like somebody wants to look at NVO. NVO As mentioned, their CEO was on all the media channels communicating that once again, Novo Nordisk is surprising to the downside. They pre-announced that they are going to have a hard time growing in 2026, and the stock really came down 14.6. At this point here, Novo Nordisk is not investable for me. It's just a problem stock. I don't know if it's going to take 2 years for it to get back, but I just need to ignore it going forward because just too much negative news. They've been in the negative news cycle for, when is it? Like, I guess a year and a half, more than a year and a half. And you got to figure out how to end it. What's wrong with the business, fix it as soon as possible. In fact, you should have saw it back here before it became a big, stock decline, because now the pressure's on. The stock's really just sold off. It was mounting a little bit of a rally, but now it faded. It really let down investors that kind of got bought into this rally, and then it faded down. So Novo Nordisk, when I look at the valuation, it's going to be discounted. And I'll update it tomorrow when they announce their earnings. But this is a discounted stock. But the trouble's right. Whenever I make a decision on a stock, I go through kind of a qualification process where, is the business good? Do I want to be an owner? And the answers to that is no, the business is not good, and I don't want to be an owner. It's just going to be a problem company. It'll stay discounted for a while. We'll see how they can grow, but I could tell you, I'm probably going to restate this growth down, maybe down to 5% or 7%, and that'll affect the valuation. And I'm curious to see how they're going to state their earnings per share guidance for 2026. Those numbers will move. So these here for now, I think I'm going to move that to 7% and probably move this to 0%. The stock's still discounted because it's been sold off for a year and a half. So we'll see what happens tomorrow. I'm not putting any more money into healthcare. Healthcare and software have just been real big surprises. There was really good pricing there, but there's good pricing for a reason. The market's been selling off those two sectors, and it's not looking back. It just continues to sell them off. So I'm not going to stick my capital out there to get, pummeled. I'm going to just work around it and not invest anymore in software until things turn around, as well as healthcare. Just pump the brakes. Don't put any more new capital into those spaces. So those are my comments on Novo Nordisk. Looks like Ricardo wants to look at BSX. Let's take a look at that. That's Boston Scientific. They announced tomorrow. And these guys, Boston Scientific Corporation, develops, manufactures, and markets medical devices for various interventional medical specialties worldwide. It operates in 2 segments: med surg, cardiovascular. Got it. 53,000 employees. So it's med device. Let's take a peek at their website. Okay, so I like to get a sense of their products. So let's see if they can give us a quick glance of their products. So they do this kind of equipment. Pretty advanced stuff. Okay. Got it. Okay. All right. And these machines, they sell them, and they sell them with these maintenance contracts. They actually probably lease them out. And it's a nice reoccurring revenue kind of business. Let's take a look at how the stock's been doing. Over the 1 year, it's down. Over the 5 year, it did great for a while, and then it plateaued. It hasn't really doing much really for about a year. So the 1 year, it did great in 2023, most of 2024, and then it plateaued. All right. So what's been going on with growth? It's been growing at 21%. Looking at the quarterly, growing at 20%. That's pretty good growth. That is pretty good growth. That's looking pretty good. When we look at the free cash flow, has been growing. Gross margins of 70%. Good. and it's profitable. Okay. So good revenue growth, 20%, profitable, margins of 70%. Those look good. 17 analysts cover it. They think it's discounted by 35%. And when we look at the growth, they're expected to grow in 26, 27, 28, growing at 12.5. And the trailing 12 months are growing at 20%. So what is, see, this is 17% growth. So if they can outperform this, that'd obviously be a good thing for them. And they're going to be growing their EPS, not by a whole lot, from 79 cents to 80 cents. Okay. I don't understand these growth rates. Why are the numbers looking like just modest growth or no growth at all? But I'm seeing the percentages go up on the website. I'm not sure what's going on there. All right. And I think it's because I'm in the quarterly. That's why. Okay. That explains it. Sorry about that. User error. All right. So 2026, 11.4, 11%, 27, 9% there. The earnings per share is growing nicely, 12, 13%, 13%, with the forward P coming down to the low 20s and eventually into the teens unless the stock price goes higher. I think there's a good chance for this stock to go higher. It's got good fundamentals. It's got good top line growth, good profit characteristics, high gross margin. It has profit on the bottom line. Now, healthcare is not doing great, right? No need to convince anybody of that. So that's important to keep an eye on. 2026, I don't think it's going to change very quickly. So I wouldn't be a little too early on this one. I'd probably want to wait for it to start rallying higher and establish a nice upward trend. But let's see if we can do a valuation on BSX. I don't think I've valued this one yet, but let's take a look. Boston Scientific, it is here. So it looks like I looked at it in October. We're in February, so it might be time to take a look at this one and update it. Now they're going to announce tomorrow. Why don't I update it tomorrow? Right now, I'm looking at a stock that is priced a little too high. Let's see if that cash flow has changed enough for me to want to update this a little early, but I could just update it tomorrow. No, it hasn't. 3.8 billion. Yeah, I guess I could update it. Let's go ahead and update it. All right. And they were going to grow a little lower than that. So I'm going to go 15. Let's see the balance sheet items. And cash, 1,280,000,000. And then we've got debt of 12,050,000,000. So we're not getting there with cash. Now, the discount rate is a little high, so we can lower that. And these growth rates are fine. Let's take a look at earnings per share. I'm going to use the earnings per share that we expect in 2026 because I'm always looking 12 months ahead. $3.50. PE of 25, I think, is good. This is a good growth company, good profits, and it's going to grow at 12 to 14%. So I'm going to play it safe. So this thing's fairly priced. They got to change the story on their valuation come tomorrow, and then their valuation can change. If growth rates go up, the valuation of the company also goes up. So let's see what they announce tomorrow. It'll be a stock to take a look at. But if you're looking in healthcare, there's a lot of discounted stocks. There's a lot more excitement out there other than a stock that's growing at these rates. So let's take a look. This stock has been struggling for a while, for over a year. Let's wait to see for the market to tell us that it is interested in buying this stock before we move into it. Because, I mean, I don't want to buy into it and then watch it go down even further. Maybe my capital just sits around doing nothing for 6 months like it's been doing in the stock for a while. So Boston Scientific for me is a pass, just waiting around for them to kind of change the narrative. Maybe they can show better growth and keep their profitability, show better cash flow. Then we're in business. They got to show me like a nice 25, 30% discount on my valuations before I would be interested. And we're a little ways away from that. They'd have to really surprise to the upside for me to get there on Boston Scientific. Thanks for asking about that, Ricardo. Peyton. Yeah, so a new class of value trap. That's a very well said statement there, Peyton. Jeez. Some of these stocks in healthcare have they've been killers. They've been so frustrating. All right, Sabir, good to see you. If you'd like me to look at PayPal, buy a $5 super chat and I can take a look at PayPal. All right, so we went over a good list of stocks that have been announcing. And let me go over. So AppLovin, I'm in the process of getting this one off my portfolio. It's still a very good stock, very good growth. They're going to announce next week. I wouldn't be surprised if the rally higher, but it's really been settling down. Look at that. Holy smokes. And this one here, it moves so fast. It flies up and then flies down. I think that the company is special because it's growing really fast. This growth looks great, but there's also some risk, which AI could disrupt AppLovin because what they're doing is they're ad tech. They place ads on the right media at the right time and based on the customers or the client's marketing strategy. We can do that with AI. That's definitely a risk. And Meta, Google, they're offering products to their customers that they could build AI and potentially eliminate the need for AppLovin. So that's the worry that I have with them. And we'll see where it goes. We'll see if they announce. For all I know, they're going to rally higher. But for now, I'm just, I'm on the sidelines with AppLovin. It was a stock that I was owning for a while. It was up like 30, 40%. But now I'm actually underwater, losing a little bit of money on AppLovin. And that is it. Sabir wants me to look at PayPal. Thank you, Sabir, for the super chat. Very kind of you. Let's take a look at PayPal. Man, this was a full fire. This was a full structural fire. 20% drop in the stock after it was announced that the CEO that's been trying to, turn things around, he wasn't able to do that. So the board pretty much announced that they're going to hire the CEO that was at Hewlett Packard. And that news drove down the stock. Now, what ails this stock is they've got, other than their growth on top line, which isn't impressive at all, you see that single digit growth at a time when the economy's doing quite well. If you look at travel, it's been doing well. And a lot of other related industries have been doing well. Well, these guys can't figure out how to grow, but they have some pretty interesting properties like Venmo. They own Venmo. Why aren't you doing more with Venmo? And they kind of have lacked innovation, creativity to be kind of a thought leader and maybe get out there. Maybe they should have gotten deeper into crypto. They should have done something because the stock has pretty much been a real losing proposition. During COVID, this thing was really high. Now it's really low. When is it going to, rise? I think for now, like PayPal, I'm not going to touch it. It's going to take a while for the market to get comfortable with this new CEO and what's going to happen with the stock. It could be like an IBM that roars higher. It could, but there's just a lot of risk out there. It is a beaten down stock. It is super discounted. So if you're a high risk taker, I would, say that you could probably swing trade this stock, buy it at a certain price, and then have a good exit strategy. But that's as far as I'd go because strategically, I just don't know where PayPal is going to be in 2 years. They could be in the same place that we're at, $41 a share. It could be that they have further problems and it goes down to $20 a share. It could just continue to bleed. And that's what I'm afraid of. It's a forward P of 7.43. That is ridiculously low. And they announced their earnings. They in the quarter. They grew by 3.7. Of course, that's just coming in with, not enough growth, not enough growth at all. We have inflation at like probably around 3, right? Little south of 3. And so these guys are just barely beating inflation. That's not good enough. You're PayPal, you're a tech company. You're supposed to grow faster. They produce good cash flow. Other than that top line, I like the other things. They're profitable, good cash flow, but it really has become a value trap. I think we covered a couple of value traps today. 83% discount according to the analysts, and I get where they're coming from. You look at their fundamentals and they look fantastic, except the growth isn't exciting enough. Now, if they can grow double digit, maybe even just deliver this growth, it might be enough for the stock to go higher. It's just this one here has just been bleeding for so long. I don't know at what point it's going to turn around. The one thing I would say is this thing's down so much that once it begins to rally, let's say it goes from 41 to 55, it's not too late to jump into the stock because it's going to keep going higher to 150 or 200. If it starts doing something like that, I'm going to change my tune and maybe come back to PayPal. But they got to show that to me first. And it'd be nice to see 2 quarters with this new CEO. That way we know if he's going to turn the ship around. Now, I followed the CEO a little bit when he was at Hewlett Packard, and he didn't turn things around at Hewlett Packard. I got nothing against him. He seems like a good guy, but he wasn't like making Hewlett Packard grow really fast. So they got a guy that's going to administer the business. I don't know that he's like a real big change agent. I don't think they has like, I guess a leadership style that creates a lot of new ideas and innovation. I think they're just going to kind of stick to their businesses they have today. And high level strategically, that's not what PayPal needs. They need like a couple new ideas that are really exciting, and they need to take some chances. Because at this point, they've just been floundering, not taking chances, letting other businesses like Robinhood really flourish around, new ideas like prediction markets, crypto, and so forth. And PayPal has really lagged. Maybe PayPal should have started having, crypto wallets. Maybe they should have started a brokerage arm. Maybe they should have been like a SoFi. There's a lot of things they could have been doing because it happened right in front of them. And the management team there probably, I would think that the board's asking them those questions. Like, what's the innovation plan? Because the company is starved for innovation. You see the drastic discount on PayPal. These are drastic discounts. Let me update this valuation since we do have fresh numbers and see if it moves at all. So this happened in November, not too long ago. So first order of business, how's cash flow doing? Cash flow looks okay. We're at 55.64, which is $1 off. All right, we can change that. Growing at 7%, I'm going to change that to 5%, and then 3% long-term growth. Even with that, it's highly discounted because the market's just sold this stock off so fiercely. Just sold it off. All right, so on the balance sheet, they're carrying a lot of cash. These guys have $10.420 billion in cash, and they have $9.99 billion of debt. We look at the earnings per share for 2026, $5.89. So we were near that number. And I'm going to go to a PE of 12, growth rate of 12%. So it's just a highly discounted stock. So when it starts to move higher, it wouldn't take long to convince me that PayPal would be a good buy. But for now, I don't know that anybody's going to touch it. I don't think a lot of investors are going to touch PayPal for a quarter, at least a quarter, maybe 2. Because right now we're in a sell-off. So why would anybody buy PayPal? I think people are just going to stay in cash to see what's going to happen. How far lower are we going to go? So for me, I'm just going to be on the sidelines, looking at PayPal, just looking at it saying, well, we'll see if they can recover the business. I'm going to increase my my discount rate as well. And it resorted the list. Let me find PayPal again. And sometimes I get these error codes because I use Google Finance and the updates are a little slow in getting to me. So hopefully it refreshes and I could show you the final valuation. Let's take a look. Restarted it again. All right. Nope, but it was highly discounted. I agree with the analyst. And right now, just Google Finance is not getting me my stock price, so it's airing out, but it is highly discounted. So that is PayPal. Thanks for sponsoring that super chat. Consider being a member. You can come on the streams and request stocks, and it'd be great to see you again. Thanks, Sabir, for sponsoring that. And I hope you found the analysis on PayPal interesting. Looks like Fall's Grave is on. You want to look at OTF. What's OTF all about? OTF. Blue Owl. These guys came up. I remember them coming up on streams, and I think they were caught up in some fear around they were doing financing for data centers, and it was getting pretty risky, and the stock was really getting beat up for that. So they were doing loans and carrying some of the debt for the data centers. And that's where I think they were also involved potentially as being a company who was going to provide financing for the acquisition of Warner Brothers. So these guys are doing that kind of deal making right now. And the market is not going higher. It's been going lower. So maybe some of these valuations are scaring investors and saying, hey, this debt they may lose money on this debt. And also, how many more data centers are they going to fund? Data centers have now been kind of put in a category of riskier. I don't want to say high risk, but I would say riskier, because if you have a lack of demand for those data centers, those assets will sit idle, maybe not earn enough money to pay off the interest that needs to be paid on the debt that was taken to build those data centers. So the risk has been going higher, and Blue Owl has been getting torched over it, down 28% over the 5 year. This is a newer issuance. It looks like they were issued in 2025. This one here, I wouldn't touch it. I don't know enough about their business. It's kind of a deal by deal basis that they kind of rally higher. And I don't have a lot of insight into Blue Owl nor companies like it. So I kind of stay away. I'd rather go into banks or something that I can understand better and I have lower risk with it. Is this going to go higher? Well, it could, but you'd have to study their debt and understand, are they going to be able to get paid on that debt? Are they going to be able to have really good return on their capital? That's the big question. They pay a big dividend, but you're trading a big dividend for a big drop in stock price, and that is not a fair trade. If you're sitting on the stock, you're underwater. You got paid 11%. You have to pay taxes on that, and then your stock price went down by 28%. So that's not the cup of tea that I want to have. They've been growing against a deal by deal basis. This company grows as they make deals. So, these are not stocks that I get overly comfortable with. These could be giant surprise stocks where, oh no, they lent money on a data center that can't pay back the loan, that kind of thing. See, their profits are really coming down. They do have good growth in the 2025 year. They probably did a lot of the data center financing, but now their balance sheet's probably being perceived as a risky balance sheet. So let me take a look at Gemini here, and let's ask Gemini a few questions. So I'm asking if it's a risky stock. See if it gives me any good pieces of information, or maybe it corrects me and says, no, they're not really risky. So determining if Blue Owl Technology is risky stock depends on your definition of risk, but several key factors currently characterize its profile as of February 2026. Sector concentration, heavily focused on technology-related companies, software services and equipment. And of course, software companies are getting killed right now. Speculative loan types, a primary risk identified by analysts, it's concentration in payment in kind loans, unprofitable businesses. Okay. And then leverage and debt. As of early 2026, the company holds approximately $5 billion in total debt. Recently, debt raises have caused concern among the investors despite the company's focus on maintaining a senior-oriented portfolio. Dividend volatility, well, it offers a big dividend. The net interest income has fluctuated, so it could be a surprise that they don't pay that high of a dividend going forward. Factors mitigating risk. They do have senior secured focus, roughly 80% to 81% of its portfolio consists of senior secured investments. I think that's that they have the preferred position. So if a business were to go bankrupt, they're the first ones to be paid. And analysts are saying that, yeah, there is a discount, but boy, I just see this as a risky stock. It's not my cup of tea. But we had this come up a few times, and man, it looked okay, but that was when data centers were on a real big run. I don't know that data centers are on the same run. We've seen some neo cloud stocks really sell off. OpenAI has become not as desirable, or maybe riskier, or maybe they have more naysayers and not everybody's overly confident on OpenAI. So there's just a lot there. I would be on the sidelines with Blue Owl. It would not be an investment that I would want to make. And hopefully you found that interesting. Fallsgrave, good to see you. Thanks for asking about Blue Owl. All right, we're flying through these stocks. We've been going for about an hour. I wanted to stream because it was a down day. Now, down days, right? On down days, especially during sell-offs, I think something that I could contribute to our community is just to help everybody just maintain a level of concentration that tries to eliminate, emotion. And you just need to focus twice as hard, do twice as much homework, and have more conviction on those businesses you want to own. We might be at the beginning of a sell-off, a good one, like we had last year, 2025, early in the year, starting in March, we started to see stocks really sell off. We did good with that sell-off. We bought into stocks at the right time. I did great in 2025. So is that going to happen again this year? It might possibly happen again. We just got to stay focused. We got to stay focused on doing our homework so that if things turn in a particular sector, we're there. We're buying shares. We're picking up stocks at a really good discount, and we see a really good rate of return. So let's keep our head in the game and not get discouraged. I'll keep repeating that, even if it gets worse and worse, because I can tell you I've made a lot of money at every correction, especially some harsh crashes. I've made good money. So the one exception would be the dot-com bubble. That one took a while for it to come back. And I would say that one did discourage a lot of people. I was much younger then, and I was a little discouraged, I have to admit. But the other ones have been awesome. If I look at the Great Recession that happened in 2008, 2009, 2010, man, I've made a very good rate of appreciation on all investments that I made during that time. During COVID, years, I didn't sell one stock. I invested more money. It went great. 2022, I set myself up with some really good companies that have done great since then. So let's just, take this as the market is reducing prices. Let's let it do its thing. Let's see how low it's going to go. And let's see what opportunities are out there for us to take advantage of. All right, so that's what's going on. Looks like Ben 10. How are you, sir? WHR. Jump today. Now, is that the appliance company? Whirlpool. Look at that. Up 7%. That's like incredible on a day like this. But this is a consumer discretionary stock because, it's home furnishings and appliances. It's washing machines, microwave ovens, ranges, the stuff that we buy, and it costs, they get more expensive every year. I remember when I got married, a washer and dryer was like, I don't know, $800, maybe less. Now, geez, man, like it's like 3 grand. They get pricey. These guys, did they announce today? No, they announced last week. What carried the stock higher? It's been troubled for a while. Look at that. Jeez. It's been troubled. Now, we looked at this recently and I forgot when, but let's look at it again here. So we've got the business has been contracting. They had a really good year in 2021, but ever since then, it's just they haven't gotten it together. And their earnings announced, they had, let's call it flat revenue. And maybe they guided higher. They're saying, hey, we're going to do better going forward. If that's the case, yeah, they're going to be growing a little bit. And the stock's really moving higher because it's so low. Earnings per share is going to get more profitable. Very good. And going to the annual, so I can look at the forward PE. Forward P of 11.7. Now for consumer discretionary, that's an okay PE. It's not incredible. Maybe you can go as high as like maybe 16 if they grow better. But the growth does look good in 2027. 2026 is kind of a, all right, we're back on track here. We are going to be positive revenue growth. So that looks okay. That looks all right. It's not my first stock that I want to go into with consumer discretionary. I am a big Amazon shareholder. That's consumer discretionary. And a couple of others are in consumer discretionary, and I'm going to stick to those. Airbnb is a discretionary stock, and they're growing at about 10%. They have a far better business model that I like versus Whirlpool that doesn't have a lot of profit. If you look at their profit, these guys make main appliances, so their gross margin is 15%, while Airbnb's got gross margins of 80%. Profit margin of 2%. Oof, that's pretty thin margins. It's very little meat on the bone. So this one here is not my cup of tea, but it's been interesting to see the stock do well on a day like this for sure. Thanks for asking about Whirlpool. Ben 10, good to see you. All right, so that is that one there. We went over earnings. You want to look at XHR. It's a small cap. Let's talk about small caps. I like small caps. I like small caps that make us a lot of money. Let's see if this is a small cap that's going to make us a lot of money. Xenia Hotels and Resorts. Now, I've been seeing that airlines are really going up, doing well, and so have the cruise lines, like the big ships, and they've been doing great. Let's see if that's catching on with these guys. 1 year flat, 5 year flat. Well, nothing exciting to report just yet. They do pay a dividend. Is this a real estate investment trust? Let's take a look. So these guys, they do hotels. Yeah, it's a real estate investment trust. So real estate investment trust, we got to value them based on earnings per share, make sure that they can pay that dividend with their funds from operations. It's dividend 3.73%. That's a pretty healthy dividend, but REITs do that. That's how they attract investors. And they have these properties that they're being paid the rents, the leases, and then they can pay that dividend. 7 analysts are covering them. And they think it's priced a little too high. And the hotel business, the occupancy's got to be there. They're growing their top line revenue by 3%, almost 5% in 2028. Their profit is going to be under pressure here in 2026. So that is a little bit of problem there. That's a problem. P ratio is going to shoot up. So this one here, I'm not liking everything I'm seeing. Let's take a look here. So their dividend has been going up. They'll probably want to keep it going higher. That way they attract investors. Now, we don't want to look at the typical dividend payout ratio. You want to look at funds from operations. That's how we treat REITs. And the funds from operations, I think, is down here. So here's the funds from operations payout ratio, 33.29. So they're fine on that. Okay. This one here, I've got other REITs that I think I would put ahead of Xenia Hotels. I own CTRE. It's been an awesome stock. Let me show that stock to you. But there are a good number of REITs, and REITs could perform nicely. They could go up in value, and they could pay you a nice dividend along the way. Because if you add 5 years of this dividend rate, you're up there adding another 20% on top of that for a lower risk stock. The 1 year up 38.4% on a company that provides housing for people that are older, elderly, that need some medical attention. And there's a lot of like really neat REITs, and they tend to be smaller caps. If you find the right ones, you could really do well with them. This is the only real estate investment trust, because I do own real estate that I rent out to people. And that's another way of me investing in real estate, not through stocks, but actually buying properties and renting them out. So that's a part of my portfolio. I don't talk much about that because it's hard to talk about it. We're talking about stocks here. But the one real estate investment trust that I own is Care Trust. The other one that I hear a lot of is VICI. VICI is, casino properties and so forth. And this one here has really good fundamentals, but the market has it in its head that it's not going to do well. It hasn't done well as CTRE or other REITs that have been doing quite well. And this one here kind of comes up a lot. I think some channel viewers really like VICI. This is a similar company to Xenia. Xenia does hotel properties and so forth and resorts, and so does VICI, but it's more gambling oriented, casinos and stuff. And they pay a nice dividend, 6.42%. But again, I don't want to trade a dividend for a stock that's not going to appreciate. I want my cake and I want to eat it too. I want it to go higher. Okay. I want it to go up 38%, and I want to be paid a dividend. That's what I'm after. And CTRE has been getting it done for me. That's the REIT that I like. And there's a couple of others that are really good out there, by the way, not just that one. So that is my review of XHR. All right, everybody, let's call it a night. Let's see what's happening in the pre-market. Then I'm going to close the show. Again, I'm going to stream tomorrow with Daryl. So if you'd like to tune in, that'd be great. It's going to be at 9 a.m. Eastern. Let's take a look at the pre-market, see if any headlines are coming out. And it looks like futures aren't showing us much. AMD shares are under trouble. Did I talk about AMD? I don't think I talked about AMD. I should have talked about AMD. That's the biggest company that announced today. I did a full valuation of them already, and I shared the valuation on Discord. It's down 8%. Holy Toledo. That's a lot of pressure. These guys have been kicking butt and taking names up 108%. So they're doing just fine. And over the 5 year, investors are doing just fine. But look at this volatility, selling off harshly and then rallying back, selling off harshly. Is that going to happen again? Are they going to come down to 160? I don't know. We'll have to see what happens. They announced today they've been growing nicely. The revenue has been growing real well with big chip sales. I get it. They're going to be growing. I looked at their financials. They're going to be growing at 34% going into Q1 of 2026. So that's good growth, but the market wanted more. They wanted better growth, and they're selling off the stock. Looking at their forecast looks really good. Look at this forecast. We got revenue growth at 32%. They guided the first quarter to be 34, followed up by 40, followed up by 27.6. These are really good numbers. And the profits are also going to expand, bringing down the PE ratio real drastically. I think if they hit this forecast, there's no way around it. The stock has to go higher because it shouldn't be trading in the low teens. But will they be able to keep this forecast? That's the trick. And maybe the market is losing faith in the whole AI trade, because looking at where the stock is headed, I think that's what's going on. Now, when I value the stock, I got to probably close to fair value. I don't see a big discount in AMD. I mean, how can you find a big discount on a stock that's up more than 100% over the 1 year, right? But this one is priced fairly with the 3% premium. Not too bad. Now, I own some semiconductors. I'm staying pat with Astera Labs. I own some NVIDIA. I bought more NVIDIA today. I own Qualcomm and I own ASML, which has been doing really well. I'm not buying any more semiconductor beyond NVIDIA. It's, I think, a market that has been doing great. But if it starts to track lower, maybe it's going to start tracking lower for a long time. So I'm going to be careful not to overload on semiconductors. I think this could be the first kind of leg down, followed by more sell-offs in semiconductor because they've been flourishing for 3 years. And some of the valuations have just gotten really, really too expensive. So that's AMD. And that is it, folks. You guys, thanks for tuning in. And just to let you know, I did start a website. It's called rationalstocks.com. And right now you can visit it. And, I'm just beginning to get a good strategy. It's going to basically mirror the investing approach that I have. I'm going to try to add what I think is going to be valuable content, maybe some more educational oriented content for people that want to, like, for example, learn more about accounting to make yourself a better stock investor. I'm also going to talk super investors. I don't know what happened there. It looks like I've got an error on my website. Well, I have to look into that. But I'm also going to intend on adding a member-only site where I've already got a valuation model that I'm working on. It's going to mirror what I do on Google Sheets, but making it easier for people to do valuations. So at your leisure, take a look. And I put a link to my website on the live stream contents or the description. And that is it for the website. All right, everybody. Well, have a good night. I will hopefully see some of you in the morning. Good luck. Let's see how the market trades. It's been rough day, but let's see what happens tomorrow. Fingers crossed that we get a little bit of relief from this sell-off. Have a good night, everyone.